2, taking stock. It's 12 o'clock. It's the 20th of September 2023. And John, did you see the CPI data?
Yeah.
That was surprising, wasn't it?
Not surprising. I pull my microphone over. We economists not great at forecasting, are they?
Rubbish. Absolutely rubbish. I mean, I'll go through them here, but there's a lot of people saying now that the Bank of England may not even raise rates tomorrow, or if it does, it may be the last one. That's it. So, but look at this. Actual was 6.7 and the forecast was 7. But months on months, like I said yesterday, they're expecting 0.7 increase. It was like 0.3. And even core is down. Let's say, look at core inflation. Look at that. Actual 0.1 for month to month. The forecast was 0.7. They were way out. Don't believe anyone, experts, economists, way out. That's serious. But so now, this is very bullish, I think, for the stock market. And because I keep saying they may keep them up higher for longer, as they keep saying about interest rates. But where is the direction of travel from there? After a while, it's like Tabletop Mountain in South Africa. It goes up for a long way, flat across the top, then eventually goes down. The market will look at that as much as they can. Okay, and in fact, let me just share with you. Let me just look at the bond prices here, because the bond prices are rallying. There's a 2-year. There we go. Share screen here. Look at that. That is now hitting. Let me just scroll. It's 2-year bond price. Okay, and this is what mortgage rates from come down based on this yield. So the price is going up, the yield's coming down, and you can see they're really on a support level of that 4.8 level. And if they are quite sort of dovish tomorrow, the Bank of England, that'll drop further. That'll have a positive effect on mortgage rates and all that stuff, which are very good. In fact, house builders are. In fact, let's go to the
they had a good day.
Yeah, house builders are sort of rallying. Let's share. There we are. FTSE 100. Everything's up today. Already, it's starting to rally, ladies and gentlemen. This is it. It's the end of the bear market.
Too loud.
It's the end of the bear market. I'm telling you now. Been saying this for weeks. But Taylor Wimpey, Land Securities, Barratt, they're all up. And
you've got big property developers there as well. Land Securities.
Yeah.
Seagrow, which industrial property.
Bellway, Persimmon.
Ex Big Box, warehousing. So obviously very, very interest rate sensitive sectors. So
even on the market, look at on the market there, up 8% a day. You know, and what is that saying? Ignore the economic data, right? What is the market doing? Look at the price of the market. How is the market reacting? That's what you should be looking at. Don't worry about what's being posted out there, gloomy economy, all this stuff. We know that it's been priced in for the last 2 years. I think we are. In fact, let's look at the indices. I think the AIM All share is rallying a little bit as well. Now it's early stages. That's the low, pretty much. It looks like, and we got a higher low, higher low, higher low. We need to break this to the level 750 on the AIM All share. I think we're going higher. But I'm quite encouraged by this data. Really am. I mean, little blips. But I can't see the Bank of England ratcheting it up now further,
Well, they'll probably do one more. Well, they'll probably do their 0.25 as they'd planned. But I thought that was always likely to be the case. And again, one thing I would say, just be wary that this is 1 month's reading, and as we spoke about yesterday, you've got petrol prices rising again. So September might not be quite as accommodative for rising share prices.
It'll be effective. I think we are sort of see. I mean, inflation is not going to come straight down. Of course, there'll be bumps in the road, but I think what we should be looking at central banks and what are they doing, because they're following data and the markets are being steered by them, of course. And if they see no more ratcheting up of the interest rates, then that's going to help. By the way, a couple of discussions. We like this. Get involved. Hit that subscribe button. Like, share if you like what we're doing here. But already yesterday, John, you said, Michael said, people say EBITDA is irrelevant, including John in brackets. So why do companies highlight performance in this area? So what are the more relevant measures you chaps sense check investors? So
EBITDA I didn't say it's irrelevant. I said I think you've got to look at which company is reporting, and in the case of EBITDA, so depreciation and amortization, which EBITDA essentially stripped out of the profit figure. So it's operating profit before depreciation and amortization.
Yeah.
Because in many cases, depreciation and amortization are not really cash costs. Particularly where you've got assets or goodwill where the life of that asset, it doesn't fall within the usual depreciation rules. It can be extended.
Yeah.
So it doesn't have to be replaced all the time. And the reason I don't like it being used by Ocado is because actually, in their case, the depreciation of the assets that they have, fleets of trucks and large warehouses full of, moving parts, it needs to be replaced to keep that business running. Yeah. And therefore, it is a real cash cost.
Yeah, exactly. I mean, you use a big depreciation number, like you say, and I've got all these warehouse centres and with robotics. Those things are quite capital intensive, aren't they?
Very much so.
And so when you have to, eventually they will have to replace that capital. So they can't just discount it and say, "Oh, if you took that out, we'd be doing quite well." But you will have to replace it though. So be careful when companies use that. If they're a capital light model and depreciation is used, it's fine. But I mean, like I say, if they're replacing stuff like that, it doesn't make any sense. Okay, but it is handy to look at it's almost like a precursor, isn't it, to pre-tax profit and all that stuff. So when companies, it's a flattering measure, I suppose. I
mean, I like pre-tax profits, really.
Yeah.
Why go far beyond that? Because at least pre-tax profits and then after-tax profits, of course, are what EPS figures are based on. EPS figures are what ultimately we value companies against, and so I like seeing companies generating pre-tax profits.
Really. But saying that though, John, the biggest gains I've ever had are in companies that are not making a profit.
Oh, that's true. That's true. It's because what we said, you've got to see where the profits might come from one day. They've got to generate, and ultimately, what really a company should be judged on is its ability to generate cash. So to turn those profits into cash, because cash is, you can't lie when it comes to cash. Profits can be adjusted, manipulated, in all sorts of ways. Not that all companies do it, but some do. Exceptional items, all this sort of shenanigans that goes on.
One-off. I like there's one-off adjusting for one-off items, and that you tend to find there's one-off items happen every year. It's like, well, that's not one-off, is it?
Quite.
But no, the thing is, I mean, if you're an investor and you're looking at cash flow, fair enough. I mean, you can value a company accurately on that. But the trouble is, when the cash flow starts coming in, pretty much a lot of it's priced in. So there's less upside. So if you want to take more risk and you go, further down the sort of the scale there before they start generating that, but you can see that their top line is growing. They're not yet making sort of profit yet, but then there's sort of big market and they've got something special about them. Then you can sort of get in earliest. But of course, there's more risk there because if they don't achieve, if that doesn't drop through and they have some one-off costs, and they're a small company, of course. It's a lot more volatile because maybe they have one revenue stream or two, and if one of those gets taken out, so if you increase the risk, you can increase the reward, but you have to be very careful that it's not just fantasy you're investing in. And that's why when I'm investing, I've got a whole load of filters I go through, and I constantly evolve them. Some of them are wrong, but having rules to stick to them is two different things. I've had plenty of rules that I know work, and then I won't stick to them because my emotion gets carried away. The share price rises, I jump into something. I mean, you can have. It's almost like saying, isn't it? What would you prefer? A 2% chance of 1,000 or 10 bagger, or a 50% chance of a 1 bagger. And
I think it really depends. But it also depends where you are in your investing journey. If you're approaching retirement, you're going to need to draw down, your equity holdings to pay for your retirement to generate an income. Then the last thing you want to do is blow the lot. So you would tend to go in towards sort of safer assets later in your investing journey. By the same token, at the beginning, if you blow your capital on day one, you're going to have a job getting it going again. So a lot of those rules of thumb.
I know that's about portfolio management as well, isn't it? I mean, it's not just about buying stocks and shares. It's not just about that. It's about managing your portfolio as well. So you have to understand, like there are some people we've talked about, but their entire money into one stock, and I think that's very high risk. I've done it previously during the great financial crash, and it sort of paid off. It was in the Lloyd's Bank that, and I thought the risk reward there was a good shape really. I thought there's more upside than downside here. Anyway, a couple of comments here from yesterday. Informa Ocado is an unprofitable tech company. John would have made so much money if he invested in these kinds of businesses in the New York Stock Exchange. Uber has been going forever, paid by foreign investors until one day it becomes profitable. No, it's true. Listen, I say I have made my most, the best money ever out of pre-revenue or not unprofitable companies, but they are due to hopefully be. I mean, an example of that is Destiny Pharma I invested in, and it's going quite well for me already. Just come out with results. It's taken a bit of a knock. You get that now and again on liquidity events. Like when reports come out, you tend to have that. Stale bulls or legacy holders will use a liquidity event like interim results, final results to get out because the story is very good. And in fact, they've been extending their cash run to Q1 2025, and they've got some amazing. In fact, Chris Tovey, who just came in from GW Pharma, taken up by Jazz, he said Destiny Pharma is in a better position than GW Pharma was when I joined it. GW Pharma, after he joined, about 6 months after he joined, was taken out by 7.2 billion acquisition by Jazz Pharmaceuticals. And he said, we've got 2 phase 3 assets, Ray Advance and a pipeline, which is amazing. One's already, got a deal on one phase 3 asset. The other one, we're looking for a deal that's a lot bigger. So I think it's a very good play, risk reward. But would I put all my money into that? No, I wouldn't, because you have to manage your portfolio a bit,
Just having a quick peek at the Uber chart. I mean, what did that floated in 2019? Uber. $38 a share.
Yeah.
It's now $47 a share. So, I mean, it's been up and down, but it's not exactly blowing the lights out, that one. I'd rather stuck my money in a company like Apple, which, over the same period, let's have a quick look. But I can tell you right now that it's done a hell of a lot better. So over the 10 years in Apple, 2013, it's go from 2019, let's go from $40 a share to 180. So I'd rather, and Apple generates bucket loads of cash. So, via pension holdings, I've got exposure to that. So I'll stick with the ones making money. Thanks.
It completely depends on people's risk reward. I mean, if you want to do multi-baggers, you've got to go on the market cap and take on more risk. But that's what it is. There's more risk there. So you have to be, do a bit more deeper research to avoid the usual sort of downfalls. And the most important thing of all for any, loss-making company is cash. Do they have cash? If they don't have some 12 months of cash and they have to raise it in this market, they'll take a massive hit. And then you add some filters, quality filters along the way, and look at the market potential, the market size, what they're addressing. Is there something special about them? Do they have something unique that'll set them apart from competitors, that'll make their earnings enhance, their margins better, all that kind of stuff. But by the way, Stephen says, I think Hargreaves Lansdown, we talked about yesterday, was the final results out, are subject to competition from AJ Bell, Interactive Investor, and other on-mobile platforms with cheaper fees. True. Is that the worry with them? Is that why they've come out, apart from the wider economy and people investing less, of course, that happens with a downturn? I mean, is that also compounding their issue that they've got some, people coming into the market? Because when you get this, when you have a big player like Hargreaves Lansdown that corners the market, then of course people come in and take a bit of margin or a bit of market share off you, don't they?
I mean, a few things went wrong with Hargreaves, and I think that competitive threat is definitely one of the reasons why the shares fell out of favour. And in fact, Interactive was bought by Aberdeen. Got a very sort of powerful owner behind it. AJ Bell obviously listed as well. I don't know if it still is listed, but I haven't looked at it for a while. So there was this worry that having dominated the market and been able to charge what it likes, essentially, within reason, that it's sort of its ability to price would be whittled away by that competitive threat. But the funny thing about financial services is that, once someone's signed up, people don't like to move. There is massive inertia in financial services. It's possible, there's also been a lot of regulation that makes it easier to kind of move your money between one provider and another, which will also have been a sort of threat hanging over it. But the reality is people just don't, people once they've got their, $250,000 stuck in Hargreaves Lansdown, the hassle of moving it's just not worth the effort.
I did at the start. I had an account with Hargreaves Lansdown at the start, and a couple of friends of mine I do a weekend podcast with now and again. They've still got their stuff in there, but they often complain about trades and that they can't sell or buy stuff. And I moved away from that. This is AJ Bell chart, by the way. They're relisted back in 2019. they went up and they've come back down a bit like Hargreaves Lansdown, really. I mean, they are close to lows, so they're not shooting away as far as the stock price is concerned.
Yeah.
But, okay, let's go.
I mean, the other thing is that because of this competitive threat, Hargreaves was seen to have rested on its laurels with this dominant position, not invested enough in tech. And that it was going to have to play catch up, and that would be expensive. But as we saw, it's got a lot of cash sitting there, and I wouldn't say that's a massive concern. And of course, the Neil Woodford thing hung over it. It's select list, so there was a little bit of antipathy towards the company at that point.
Yeah, there was big promoters of Neil Woodford, and then all of a sudden he went pop. But again, even then, Neil Woodford had a couple of funds, didn't he? And some of them were very high risk, and you realise, when you go to high risk funds, if one blows up, one company blows up, in effect, it has a massive knock-on effect. So you realize they are risky, they can go through, and if they're burning a lot of cash, if you've got a company that's burning a lot of cash, where's that cash going to come from until they make until they get profitable? That's a worry in these markets, especially.
Yeah, indeed.
Okay, someone says, is it Chris said, I think you two are doing with this is a great piece of education in the stock market. I think it would be great if you could do a glossary piece, EBITDA, 50, 200-day moving average, etc.
Yeah.
All right, let's look at the front page of Vox here. Union Jack Oil. It's a popular. In fact, I don't know if you've seen what Rishi Sunak's doing of late. He's clueless. When Rishi Sunak came in, I had a bit of optimism. At last, a sensible guy. He's more like an accountant than just an egos promoter like Boris Johnson.
The adults are back in the room, I think.
That's what I thought
at the time.
But now he seems more clueless than Boris. It's like he's now saying he's going to wind back on green policies. And in fact, what did
there was a House of Lords report yesterday into the it's something to do with the Environment Secretary, and this report was scathing. It described them as complacent.
Well, listen to this. They're thinking of rolling back on the 2030 petrol diesel. They don't know yet. They're talking. Rishi Sunak, they're changing everything and boilers and all this stuff. Some people say, "Yeah, great," but no, clean energy, clean renewables are more efficient and they will be better for the planet. What's wrong with having a clean environment? What's wrong with that?
But the problem is the transition, and I'm all for an energy transition that makes the world a cleaner place. 100%. Who wants to be spewing fossil fuels into the atmosphere? Yeah. Even if they, as some people claim, don't cause global warming, which they do, the greenhouse effect. Then they create a dirty environment. So and we certainly saw the whole VW diesel scandal was a testament to that. But the transition takes time, and political promises to do X by this date always. It's hot air.
This is Society of Motor Manufacturers and Traders. The main guy from there, Mike Sawyer, I think he is, has been really blasted what Rishi's doing. And also this is the Ford UK chair, Lisa Brankin. She says our business needs three things from the UK government: ambition, commitment, and consistency. A relaxation of 2030 would undermine all three, because they've invested billions in this transition, and yet all of a sudden Rishi's changing the goalposts. Hang on a second. Do you actually consult with businesses when they do this? When they make this, it seems like internal political pressure. That's what it's about. It's not about the wider economy.
There was another scathing attack on the business secretary the other day. Whose name? Kemi Badenoch. Suggesting that she's just keeps asking questions about what does business want, and never sort of actually coming up with any solutions or really listening. Just keep going back with this. But what does business want? What business wants, and we know this is, as you say, certainty, as the SMMT has said quite forcibly. Certainty. Moving goalposts, moving targets is never a great thing. This was the problem with the whole sort of nutrient reform, that the housing thing that came up and was defeated in the Lords recently. That sort of came out of nowhere. Then you had this massive period of uncertainty that certainly has caused some companies a fair amount of trouble, and as it turned out, it was completely unnecessary. didn't get through. Stupid idea in the first place, and it's just caused a bit of ag for quite a few companies. So
anyway, before we get into politics, because we could go on that for hours, let's talk about some company news. Union Jack Oil acquisition of 3% in Beacon Energy, and they've got a portfolio of appraisal and exploration onshore German assets. What's the share price doing? Not a lot.
Yeah, Beacon raised some money recently. I noticed. So presumably,
been a bit under the cost.
Presumably, UJO had a nibble on that.
Yeah. Okay.
But it's doing really nicely. This kind. I mean, Union Jack is producing. Wrestles is big. It's big cash produder.
Look at the rise today. Roslyn Data Technologies up 5,000.
It's a share consolidation.
I don't know what's happened. I missed out on that. But most followers, Destiny's up there. Yes. Sorry, it's another rant from me, but I just anything. It's a special vehicle, that special company. I think it's massively undervalued, and in fact, even the change of board, the quality coming on there shows that. But yeah, just Roslyn Data Technologies. There's a consolidation. There's not a lot of news here. Most read here. Avacta's second most read. In fact,
Avacta has appointed a temporary chief medical officer. And it's basically making this a permanent role, and this appointment is it's just to fill the gap and help with that recruitment process. But I mean, it's really sort of part of its commitment, really to getting this thing through the phases into commercialization.
Yeah, they've appointed a joint broker as well, haven't they? And some people says, placing. No, it's not necessarily placing. I mean, honestly, you appoint brokers for research sometimes, more coverage, and all that. So it's not all that placing.
Shares are off a little bit, so that must be why people must be speculating that they're going to raise money. But I was under the impression they had a fair amount in their coffers.
Yeah, but nevertheless, it's down 5%. But let's be honest, it went up by 22% yesterday. You're going to get a couple of people down. It's above that 200-day moving average, which is quite nice. When it's done that previously, gone above that, then it's tended to sort of start to have a nice rise. And so it's looking good technical wise. This is what Sean said yesterday. And then we said, "What's your favorite stock and why?" All right. Sean said, and he does love this. He's quite obsessed with Avacta. I've seen him on Twitter or X. Avacta is my favorite stock. Why? Quality management, making a real difference to humanity. And I think it's close to a dead cert as you will ever get. Wrong. Nothing is a dead cert, in investing. Nothing. Even the best companies in the world have gone through really bad patches and gone bust. And especially pre-revenue. So be careful with that, Sean. Getting that in your head. You can lose you a lot of money. I'm not saying it's not close to one or what you think, but nothing is a dead cert. Honestly, it's not. And if you have that in your head, you can do yourself a lot of damage. Anyway.
Yeah, I mean, one thing he's certainly right about is that, it's a very, very strong management team. And it's only got stronger today with this appointment. So, they've got the right people in place to make this happen.
Yeah, I'm not just saying this about Avacta. I'm saying this all companies. Nothing is a dead cert when it comes to investing. It's all about probability, and nothing has 100% chance of success. Nothing. Biggest company, it's a lot bigger companies than this with cash generative have gone bust through mismanagement in some way. But anyway, I'm not talking about Avacta. I'm just saying any investment, you shouldn't think of it as a dead cert. Honestly, it'll damage your investment returns. But so anyway, Justin, the upside potential is unfathomable. Even from a 300 million market cap, I'm convinced if you learn about Avacta, you buy it. Simple as that. And final one on yesterday's comments, just on what's your favorite stock. John Butt says chicken stock. Have you tried it? Hey,
yeah,
there.
The Knorr stock pots are the best stock actually, made by Unilever.
Yeah, there we are. Someone did say, why Unilever, John, out of all of the things? Someone did ask about that.
Knorr stock pots.
Yeah. Anyway, so Avacta's most read. Greatland Gold, they've got an agreement with an Aboriginal sort of area to the native landowners to get on their land and start looking at stuff. GGP, I know there's a lot of followers in Greatland Gold, essentially because of this, this hype here we've had, which this rise previously. And I say, if you look at that, this explains why it did what is it? Something like we can't even see that. But several thousand, but 2,300% in 259 days, and obviously it's come down since that, and people think it can rise back up. But wasn't that? I'm sure that was part of rumors about being taken over. I'm sure that's what fueled a little of the rise, and the Iberian project. There's always like that. But do
you know what? Funny enough, just talking about big, baggers. I had a look. Big baggers. I had a look at the 10 biggest, best performing shares on the London market this century. And unfortunately, my days was slightly limited by the fact that if something is no longer listed, then it doesn't pop up. The best performing share with 9,760% total return is Diploma.
Wow.
And the second best, JD Sports. Going back to that conversation the other day.
I wasn't aware of Diploma, but like I said, JD Sports is one of the things I had about 5 stocks that have done superbly well. 10 bagged over the last 5-10 years. I looked at all of them, and like I said, what they had in common, there wasn't a lot. The sector was one similar, but what they had in common was top line growth was pretty much consistently 20% or above, and earnings were 20% above. At the start, the earnings weren't there, but the top line was, which fueled the earnings, good margins. But that's Diploma from going back 2000 and
I went back to the start of the century, start of the millennium.
Yeah, there we are. Diploma from 85 pence to 30. Well, that's a nice return. What do they do?
Yeah. I can't remember. I haven't got that far.
Let's have a look. This is often worth looking at, previous winners to see why they won. Technical products and services, obviously in 3 life sciences, which supplies consumables, instrumentation and related services to healthcare. Oh, there we are. So
picks and shovels.
Yeah.
The picks and shovels of healthcare.
It supplies seals, look. Or supplies seals and gaskets. See?
Widgets.
Unsexy businesses sometimes.
Boring is best.
Unsexy businesses, sexy returns.
There you go.
Yeah. All right. So anyway, front page of Vox. What else is on there worth
10 Lifestyle. 10 Lifestyle.
What do they do again? 10.
Basically, they run essentially loyalty programs for very big banks, highest wealth customers, wealth management businesses. So it's almost like a digital concierge service. So 10 Lifestyle, basically, if a bank has or wealth manager has a customer who wants to go and see, I don't know, Taylor Swift, can't get hold of any tickets. But wants to take the kids, 10 Lifestyle makes those sort of experiences happen. So really for keeping, banks' wealthy clients happy, 10 Lifestyle has contracts with
John, I wouldn't see you as a person that enjoys a company that caters to the elite.
Well, it's all about the bottom line. No, I mean, I guess though, you've got to pick things that are likely to work, and despite some of my sort of political views about wealth distribution, the reality of the situation on the ground is the rich are getting richer. The rich are getting richer.
Regardless of my political views on democracy and whether people
the rich are getting richer every
catering
day.
To a very well-heeled upper class, and are doing very well because of it. So I'm going to buy some shares.
The numbers just stacked up.
True though. Sometimes, I mean, how far do you go with that? How far do you go morally?
I don't think there's nothing immoral about this.
No, but I won't invest. I mean, directly. I for a long time I haven't invested in sort of tobacco companies and all that stuff, right? But I realise my fund is invested in those.
Yes,
It's a high dividend, and they are investing in banks and Imperial Tobacco.
There is nothing immoral about servicing a particular demographic. Even if you are somewhat, dismayed at how rich that demographic is. That's nothing to do with this company. This company provides a service. It provides it very well. I really like it actually. Going back to companies I like, Alex Cheatle founded it. Has built this thing up. It was, and remains chief executive. And that's the kind of company I like to see. Very
adjusted EBITDA is 145%. But sometimes you look at that, you think adjusted EBITDA. EBITDA in itself is sticks into some people's throats. But you've got to look at that, and then adjusted is annoying. But then what's quite good, as long as they haven't done a fundraise in some way, that's quite good. The cash level, cash levels have gone up from they've gone up $1 million and a bit. So that shows they're generating cash.
Massively cash generative in the second half, and that was as promised. When they updated at the half year. The other thing I'd say about this company is it's called a B. It has a B Corp certification. B Corp being kind of a hallmark, a trust mark of companies that operate in that.
pretty much good for the planet.
ESG, absolutely good for the planet, good for its employees. That's I think is going to be a very, very important thing. More companies will go after that. But 10 Lifestyle is a B Corp. So ticks a lot of boxes for me.
Crimson Tide wins a new contract. This is one of those companies that manage workforce and all that stuff, and recurring revenue, which is very good. Sorry,
Justin. I must admit, in the interest of disclosure, before I forget, I own some shares in 10 Lifestyle.
Oh, there we go. Hey! That's all right. I own some in DEST Pharma, and
you wouldn't really?
You wouldn't know that. It's very high. I just see it as
anyway. Sorry, Crimson Tide.
Crimson Tide, like I said, they manage workflow via apps, Internet of Things, all that stuff. They sort of digitize, make it more efficient, and they for people, from everywhere, from supermarkets, people cleaning. It's more now, rather than have a cleaner, for example, go around the supermarket and then no one knows what she's doing, what she's done. They have all these apps and stuff that the cleaners have to tick off. They can tell them how fast they've been doing it, how much they do it, the quality control, and it really digitizes the workforce. But they've won a new contract, haven't they? But having said that, the share price hasn't. It went down in that today, which odd. Down 9. it's odd, isn't it? What's the market? It's nuts.
I think it's again, it's a very, very good company. Internet of Things is only going to get bigger. Contract catering is an increasingly important specialism of this company. This is sort of providing hospital meals, and also the US expansion. It's very good to see it expanding into the US.
And a bit of news out on Saietta, of course. They have got a new CEO, and they Tony as acting chairman. David John Woolley. There we are. He
looks. He's got a lot of experience in EVs. He's been working on to the EV transition for 5 years, but he's been in the auto industry for quite some time.
It's a weekly chart there. Do you know what? I quite like that. And when you see a company batting its head against a 200-day moving average, any future good news that could pop and that could ride. Like I said, if you see that as a support line there, that 50 pence, nice round figure, there's a bit of resistance there. And like I said, it's hit that before, broken down then, and then try to get above that. It hasn't quite done it. So that 50 pence there, if it gets above that on new news, then it could go higher. Quite like that.
It's a good sign, when companies bring in. Reach a certain stage of growth and then bring in the big guns, the guys that can really sort of take these things forward commercially. It happened at Crimson Tide as well. It was found a run for a very, very long time. And they brought in Jacqueline Daniel to get it motoring.
So, someone just said, Justin, you are probably in the elite of Wales. Number 1, Alan Wynne-Jones. Number 2, Catherine Jenkins. 3, Justin Wade. I'd love to be in that bracket.
But Tom Jones.
He's a king of. He should be the Prince of Wales, Tom Jones. Does he how the current Prince of Wales became Prince of Wales? No one voted him in, but if you had a vote in it, Tom Jones would be the King of Wales.
Of course he would.
Guaranteed. Okay. Any other news on the front site there, John? There's Prospex, I think, isn't there? What are they doing?
They just had some half years, but they've made a lot of progress at a gas producing field in Greece. Italy. Sorry.
It's in Europe.
And some real progress in Spain as well. So they've now got producing assets in 2 different countries. In Italy, big offtake agreement with Shell. Gas marketing. I mean, the problem, we see it all the time. We say it all the time is that the gas price whacks and wanes, and the companies that's selling gas is obviously going to see its profits moving in line with that. But making a lot of progress here, and some potential production to be added as that continues.
Yeah, look at these two here, right? Digital Box got the trading update or results. We'll have a look at that now. And Brandshield are actually delisting, and yet they haven't fallen as much as Digital Box. Now, Brandshield is
a very strange statement. I couldn't get my head around it. They're delisting, but they're raising money.
Try to raise money and delist.
Yeah, I've never seen anything.
How's that going to happen?
I don't know.
Who's going to give them money if you're delisting? We say, give us your money and then we'll run away with it. Like,
I can't work out the mechanics of that.
No,
I read it I had a good read, and
I didn't understand that. Yeah, come on, give us shareholders, give us a bit of money, then you will no longer be a shareholder.
Well, no, you will be a shareholder. You'll be a shareholder in a private company, which is.
But how do you sell your shares then? It's like illiquid. I don't understand. So anyway,
you have to trade them with the company. It does actually happen. So if you are a shareholder in a private company, you used to get letters from people when I was at the IC, whose companies had been taken private, but still held shares. And you can get rid of them, you can sell them, but it's just it's not in a liquid market.
Yeah, there's no market maker, is there? So you got someone who wants them, or the company maybe. But this is Digital Box. Now they're online, so they own a few sort of models. What are they called? Portals for content, Entertainment Daily, for example, all this, and they do say traffic's increasingly being reduced on their sites, and also furthermore, the Digital Box block within Google Discover, cutting traffic to the group's leading brand. And so you've got to be aware of this because this is hitting all. And you understand a bigger model of this, more successful, is Future PLC. Yeah. And but of course they've got more optionality. They've got more sort of sites. So you understand at a smaller level when you have this. But they do say, nevertheless, they remain. They say approximately 2.8 million company remain profitable at an adjusted EBITDA level. It's like they're always using this, aren't they? But
interestingly, there were some results actually. I haven't had a chance to look at them in great detail, but LBG Media, which owns Lad Bible and other things, you would have thought, if this was an industry trend, it would be affected by this kind of thing. But the numbers are pretty decent, actually.
They I remember I know someone who invested around here, and they had good cash, and they were growing. And they shot up, like I said, from what 5 to almost 17 pence. But like I said, they are feeling the pressure from. So if you only have, I think they only have about 2 or 3 titles. That's very hard when you got 2 or 3 titles, and the overall market does downturn. You're going to take a big knock, and they have, So you got diversification in that.
I have to say that this goes back to that sort of certainty thing, and governments are obviously one type of organization that needs to create that certainty for business, but in the digital landscape things are always jumping around, and to be a digital publisher involved in digital advertising, or Facebook and Google and Apple always squabbling with each other and changing algorithms and God knows what else. We heard, what did we hear yesterday? Elon wants to start charging $2.99 a month for Twitter.
Well, if that happens, you'll have no one on Twitter.
Well, you would have thought so, but you would have thought so. So, I feel very sorry for digital businesses like these that are struggling with, massive uncertainty that comes with basically these tech Goliaths.
They control the
with each other the whole time.
Yeah, and they control the internet. It's like, pretty much. It's supposed to be information-free superhighway, but it's not. It's almost like toll payments, toll booths where they say, no, you can't come here unless you pay some money or whatever. It's nuts. We've said that business owners, they're saying now the surprise fall. Some people are saying that markets will be almost certain rates will be left on hold. So rates could be left on hold, but do they mean after tomorrow? I don't know. I'm surprised. I'm sure there's a quarter of a point still nailed on, but nevertheless, I think it's increasingly probable it don't raise any more after tomorrow. We will be here tomorrow, by the way, at 1 minute to 12, just to capture that announcement at 12 p.m. And this is good for you, John. You like this? There's an article on the BBC site saying, "Forget LA. There's British film studios that are in demand."
Oh,
I didn't realize it's Barbie, obviously a blockbuster. A lot of it was filmed in the UK, and in fact, all those garish, outdoors areas was filmed. Where is it? In Leavesden, in Hertfordshire. And
on a sound studio, you would imagine.
Yeah. And they say the impacts of strikes by actors and screenwriters in the US, which has put a number of UK projects on hold, means that the figures are likely to be beaten in 2023 because it's a good year last year. But longer term, outlook remains very positive. Of course, you're invested in facilities by ADF, which support services for all these kind of guys, for the in fact, the elite in the film industry who sit there in their trailers and catering. I've been on film sets. I was with Ruth Jones from Gavin and Stacey, and some of the trailers and the catering is amazing. really is amazing. It's lovely, and so I'm really impressed by that. And looking at their stuff, the ADF, but that's good to see the film industry doing well there.
It's massive. There's so much investment going into British film studios. Absolutely vast. I dug up some figures the other day, which I don't have in front of me at the moment, but I've written about ADF a couple of times. Some of the figures are in there, but there's huge new studios being built. There's one not far from, on the cusp of, on the edge of Hertfordshire. There's already studios in Hertfordshire, and they're, a lot of them are getting extended. Absolutely, massive industry for the UK and growing.
Yeah. Sorry. Phil says, do you ever look at how many years it will take a company to pay down its debt from its net profit? Unilever at the minute is over 5 years. I suppose a company like that is so big, diversified, it'll be okay. Yeah, I tend to look at literally at that 3 years or more, and I start to think, I don't know. But if you're a massive company, it doesn't matter. But
it's like the government, isn't it? It doesn't work in the same way. There's capital efficiency, so they will always have debt. That's the way they work. You'll never see a company like Unilever with a net cash position. But the thing to look at if you're worried about debt really on a company like that is interest cover. As long as they can pay their interest, then they're generally fine.
And finally, the award to the most random engagement, again, most random comments goes to Fredo at 300. He's done it again for 2 days on a trot. It's literally many. Interesting. Actually, last time he's ever got you, John, yesterday, but and then he's on LOL. But
I've got a feeling he still is. I did some shopping at All Games. Look, then you can see it.
All right.
Yeah. Exciting. Well, actually, my brother did some shopping.
Did you buy an anorak as well?
Already got several of them.
Okay. Cheers, everyone. And don't forget, big day tomorrow. We'll catch up tomorrow. And interest rates, will they hike? Will they not? And join in the fun tomorrow. If you like this, share it. Hit subscribe. Just send the link around to all your email contacts, everyone you know. Okay, just do that. Thank you very much. Speak tomorrow. Cheers, John.
Yeah.